Welcome everyone. Another Park Launch Forum chat. This time we are focusing on a very, I would say, sought after subject. Two VCs here with us. We're very fortunate to have two VCs of Pakistani origin, and we'll go through their introductions, mostly covering tech on two different geographies. So we have the pleasure with us to have Zain Ghulam Ali from California at the moment, and we also have Awan from Pakistan right now. And Aatif was also in California till a few months ago, maybe a couple of years ago. He'll get his introduction. Zain at the moment is heading Amazon Alexa's early stage ventures in the US. Aatif moved back to Pakistan after some stint in the US and is the founder of Indus Valley Capital, which looks at very early and seeding stage and then follow-up stage capital in Pakistani tech ecosystem. So Zain and Aatif, welcome to Park Launch, and we are very pleased to have you today. We'll go through the VC's mind in some way, the mind of a VC, how that works, what do you guys look at in terms of investments in the venture. We'll also ask you a few questions that the audience will ask. For the sake of audience, what we'll do is if you have questions, please put them on the chat on the side. I will apologize in advance that we may not be able to go through everything, but I will try to have a collection of questions and go through most of the common ones or some very odd ones, hopefully. So Zain and Aatif, please take some time to give us a proper introduction because I've just introduced your names really, and then we'll take from there. So Zain.
Sure. No, and thanks for everyone for the gift of your time, and Ahmad, Aatif, for the pleasure of joining you on stage, Ali and others as part of Park Launch to give me the opportunity, give all of us the opportunity to kind of join together. So a little bit about me, as Hammad said, I'm of Pakistani origin. Both my parents come from Pakistan. Interestingly enough, my broader family is a full South Asian story, including my wife and her family. And so, my father was born in Karachi. My mom was born in today what is Bangladesh, but at that time was East Pakistan. And then my grandparents were all born in Gujarat in India. And so there's a lot of migration as part of that story that plays into how my life has played out. I've myself lived in 11 cities in my short life. And that also plays into how I think a lot about kind of my investing perspective, why I'm an investor, why I like to help entrepreneurs and why I believe in a lot of their missions. And it also plays, inshallah, into kind of how I think about the future of the investing impact that I have. So, starting college-wise, I've always been really passionate about technology and connecting people. That starts with my father had worked at Sprint, which, today we look at as a stodgy telco in the United States, but at that time was up and coming. And so I saw the power of connectivity between people. And then as the internet evolved and other technologies that start to bring people together, I said, this is where I want to focus. And I also see this collision of technology and media. So let me focus at that intersection. And then ended up majoring in that at MIT, Massachusetts Institute of Technology. Went on to spend about 5 years on the investing side. I worked at Goldman Sachs in M&A, helped me to get that transaction structuring skill set, and then went on to Warburg Pincus, where we were investing globally in late stage venture and growth equity companies. Took a step back and said, all right, well, if I want to be an investor in entrepreneurs, and if what I want to do is really help that long-term mission of helping change the world through that avenue, I need to actually experience it myself, and let me go and join a startup. So I went from New York to San Francisco and got my hands dirty working in a startup, an early stage startup, and helped to grow it to kind of a growth stage company. That company was called Pocket Gems or Episode. Ended up doing a short stint at Stanford Business School, and then moving up to Seattle to work for Amazon, and then I'm back in California. And just a little bit about, we'll talk a little bit about this later, but a little bit of what I do at Amazon. As Ahmad said, I help to head up investing for the Amazon Alexa Fund, which is one of Amazon's 2 corporate venture arms. We also have the Climate Pledge Fund, but the Alexa Fund is a fund we set up about 5.5 years ago to focus on AI investments, voice, robotics, digital health, deep tech, and we do that across consumer and enterprise, early stage to growth stage. We're now nearing 100 investments, and actually one of the three investing partners as part of that fund. There's me, and then one of my colleagues is actually half Pakistani himself. So I think we're fairly represented as part of the Alexa Fund. So that's my not so brief intro. Let me kick it over to back to Hammad.
Thanks, Ben. That's wonderful journey as well as what you do at the moment. So I'm sure we'll ask lots of questions. Aatif, over to you. Maybe about yourself and introduction. What are you doing currently?
Thanks, Ahmad. It's awesome to be here with you, Zan. Amazing to see Pakistanis, like half of Alexa Fund, and I think that's one of the themes that will cover Pakistani talent in general. Being everywhere and why that makes the Pakistani startup opportunity an exciting one. So like Hammad mentioned, I started Indus Valley Capital recently. It's an early stage fund focused exclusively on Pakistani startups. And so I am what you'd call an operator turned angel investor turned VC. Basically my career, all of it, 13 years, first 13 years has been in product roles. So I grew up in Pakistan, went to GICAD, then went to the US for master's, pretty typical trajectory, and then ended up joining Microsoft as my first job in a product role and worked on enterprise products, then a developer platform, then did consumer. And once I did consumer, I realized, oh, that's what I loved doing and what I was good at and what was really needed at the time. This is 2010, 2011. Consumer was hot with Facebook and Twitter. So decided to move to Silicon Valley and ended up joining LinkedIn. I joined the nascent growth team there and then built out that growth team over the next 7 years and ended up leading it as VP of Growth and International. So LinkedIn was really transformative for me. It's an incredible company, very mission oriented, and I got to work with some amazing people, including reporting directly to Jeff Weiner, who's was the CEO of LinkedIn at the time. He's one of the best CEOs in the Valley. So learned a ton from him. And then towards the tail end of that, Microsoft acquired LinkedIn, and I was the only executive at LinkedIn who'd worked at Microsoft before. So I ended up leading the product integrations between the two companies. But around this time, I started thinking about what's next. And I started dabbling in angel investing along the side, which is fairly typical these days. You are seeing more and more product operators starting to invest in startups with their own money, small checks here and there. And that's pretty rewarding working with founders directly. So one of my earliest investments was in Atoms. Many of you may be familiar with Marhor, Wakas, and Sidra started this company, and their Atoms is their second company. It's a very awesome success story to come out of Pakistan. So I wrote a check, got involved with them and got to see what it meant to take, raise from a VC and went through the entire process from the startup side. Then after LinkedIn, I took just a year off to, travel and spend some time in Pakistan. So this is 2018. And that's where it hit me when I was in Pakistan that, everything was like coming together very nicely where Pakistan was at a very unique point in terms of startups. There was some activity that's had been happening for the last 7-8 years. And there's some amazing people, who were engaged with the ecosystem, but a bunch of things were not in place previously. Mobile adoption being one, and the law and order situation being better, and the funding starting to flow. But all of that started to come together in 2018. And I felt that, the best way I could play a role in that was to start a VC fund and help bridge of that early stage funding gap, but also work very closely and partner with the startups to help them raise those subsequent rounds. So that led to Indus Valley Capital. We have invested in Airlift, Bazaar, AimFit most recently, all early stage startups, so we usually do pre-seed or seed round. And it's been super exciting to see Airlift has raised $24 million, less than 2-year-old company. So that, thing about, Pakistani startups won't be able to draw capital, like we're seeing that's not true. And it's a pretty exciting time to be here. And very excited that, I'm becoming a part of that.
That's great, Aatif. Thank you very much for this overview, and thanks especially for taking time today. So Zen and Aatif, I think most of the questions will be revolving around your experience and how you see founders and startups, and I think you both are in a unique position to meet so many founders and look at so many startups. So I would start by throwing a very generic question, really, like what do you look for in an early stage startup? It's very as general as it gets. Is it the idea? Is it the founders? Is it the combination of the two? Because we see some getting funding and some won't.
Aatif, do you wanna kick it off?
Sure. So most generally, I think investors tend to be either market-oriented or people-oriented, and basically you're looking for a combination, but some have more emphasis on one or the other. And what that means is you definitely want to be betting on a big enough market, right? So what happens in venture capital is that you're not looking for 2xing or 3xing, your capital and all the startups you're investing in. So there's very high failure rate. And there are some outliers, so it's sort of a game of home runs. And for those outliers to work, they have to be winners in very large markets. And then, obviously you want founders who would be positioned to win in those markets. So those are the two vectors. Now, being an early stage fund in Pakistan, actually the market part is super easy, right? Because it is a very large market. We know that it's $260 billion of consumer spending, and less than 1% of that consumer spending is online. So no matter what vertical you pick, there is large markets to be had and won. And then you've seen the movie, elsewhere. We've seen it in India and Indonesia and Egypt. So it makes it, the markets part easier. So we don't spend a lot of time on that. So it becomes very much about founders, and what you're looking for in founders is, people who, are ambitious. They have that clarity of vision. They understand like what it takes to build that team and go after that large market. One particular thing that I look for is, like their curiosity and their speed of both learning and speed of execution. And that's important in early stage because you're very little signal. So you can spend, like a few hours with a founder, but you don't have a lot of data point. They just started the company maybe like a month ago, 3 months ago, and Airlift was like that. Bazaar was like that for us. So not a lot of actual traction data yet. We do like to see some evidence of product market fit, but what I like to focus on is, okay, it was just like 6 weeks or 8 weeks, but how much did you learn and how much did you actually execute on those 6 to 8 weeks? And that gives you a sense of the velocity, and then you can project, okay, this company in 6 months actually at this pace would be doing amazing, and maybe they'll be setting themselves up successfully for a big next round within a year. And that we emphasized a lot and put a lot of weight on. And that was clear with both, Airlift and then Bazaar. And Airlift went on, and there is a $12 million series in a few months after we invested. So that bore out pretty well. So that's the most important signal for us. But then there are a lot of other characteristics around the founder, their ability to build a team that I try to vet very quickly as I talk to the founders.
Yeah, to kind of add our perspective from the Alexa Fund and also from Atas, what I've looked at, like Aatif, looking at the team and the market or the category is super important, because I think there's some slice of the pie that the startup that you're looking at is going to get. So how big is that pie, and how fast is that pie growing? And I think that the team is really important. I mean, some of the things that I like to really see is this an entrepreneur who's on a mission? Have they as a team, or has the entrepreneur themselves, have they experienced something like a healthcare crisis that's compelled them, something in their family that happened that compelled them to solve that? Or their family suffered from disaster management, so they're trying to really see if they can prepare other families for that. That would be more of a social impact focus. I recently came across an entrepreneur from Atlanta, which is my hometown, who's looking at the water quality crisis in the United States. And this is, of course, a global problem, but she authentically has experienced that on her own, and her father, who unfortunately suffered from that. And then there's a huge problem in the United States, particularly focused on areas where minority communities live. So that's a founder who's not going to quit when it comes to 2, 3, 4 years down the line, when things get tough and the business model hasn't necessarily proved out. As a venture investor, you want to kind of stick behind that type of a founder because they're mission oriented. They're going to continue to solve the problem. do they know the space really well? And agility, as Aatif said, is so important. I'll give you a good example, and someone had asked on the chat about what's a successful company. So I invested a couple of years ago in a company called 7 Rooms, which does guest management software for restaurants. If I own a restaurant, I want to know who my repeat diners are so that I can cater the experience to them. Let's say they come in pretty frequently, and I see them 3, 4, 5 times at the same location. I should want to offer them a free appetizer, or greet them specially, or send my manager to the table, or send the host to the table, so that I can start to form a relationship with them. Well, guess what? What's happened with that type of a software business in the midst of the pandemic? They've had to pivot very quickly to thinking about how do they retain the same customers, but now think about that space in an authentic way. What do those customers need? They need help with deliveries, enablement, fulfillment for that. So they've pivoted very quickly in primarily urban environments, and they've done really well. In the midst of the crisis, they ended up raising a sizable $50 million round. So mission orientation, strong team. Have you been able to build around you as a founder with the talents that you lack? If you're really good at growth and customer acquisition, have you now started to build out the product and engineering heft? And then, beyond that, as Amazon as an investor, we look in particular at technology differentiation. And what's the core innovation there? That's, I think, pretty critical to early stage investing more broadly. Oftentimes you can sacrifice the technology or science differentiation in return for significant traction. If you already dominate 60% of a market, great. I mean, maybe you don't necessarily need that technology differentiation, but if you're just getting started, what's going to prevent a competitor from coming in 3 to 5 years down the line and taking your share of the pie? So that's something we look at in particular. And then, of course, as a corporate VC, we are the Alexa fund. I mentioned to you some of the areas that we look at, AI, voice, deep tech, digital health. We need to make sure that there is a fit with something that Amazon is excited about, maybe a service or a product offering that we provide. And so if it's a company that can take advantage of that or can help to power that in a better way, we like it. We first and foremost look for a strong venture investment. Is this going to return from a financial metric standpoint what we expect? But then we have to layer on top that added strategic fit, which means that we end up passing on a lot of great deals. And the good part, though, is that we're connected enough where we can pass it along to great investors. Let's say that's a great fit for Aatif's mandate. I could pass that his way. He could pass it my way, and so forth. So that's a little bit about what we look at. I will say this, as I described the orientation of the founder, there are a lot of assumptions there that denote privilege, right? Not everyone has had the benefit of being a repeat entrepreneur or having acquired the right skill sets or having spent time with startups. And so, as we go about our investing, and as I go about it personally, I always want to check my assumptions and make sure that we're being inclusive, in part because that's the right thing to do, but also in part that not everyone has had that experience, but they could be phenomenal entrepreneurs. If there's that entrepreneur in Islamabad who hasn't necessarily spent time in 3 or 4 startups and seen great exits out of that, he or she still may be a rock star entrepreneur, but I just need to be able to have an open enough mind to that.
Thanks, Dan. That's very, very useful, actually. A very, very good overview of what type of things do you look at. Now, a couple of things, Aatif, starting from you. You mentioned how you looked at founders in this very early stage, the market size and everything. Now, do you think with the market size, then most of the investments are going to end up more on consumer-focused things, especially in early stage in Pakistan, speaking from your perspective as well as other VCs who are involved in this space?
Yeah, so I think if you look at some of the other markets as well, Indonesia, India, Egypt, the pattern is pretty clear. So what happens is you tend to have a large consumer economy. In Pakistan, you don't have a very large local enterprise market. So it's the consumer economy, and within that, there are small businesses. So B2B is part of that, but that's also ultimately serving the consumer. And what what's happening is that the technology is driving some fundamental change across, multiple sectors, whether it's improving the efficiency of logistics, whether it's bringing a different way of communicating or bringing some commerce online, or improving a supply chain. So it tends to be, either like direct consumer plays or infrastructure that actually allows consumers and small businesses to go about and do their thing. And I expect, like the first wave of winners will be around that. And within that, there's some patterns too. So you tend to see logistics startups, happen first. So if you look at Pakistan or in the region, looking at Baikia, Kareem in the region, Airlift. So there are a bunch of these logistics startups. And then you start seeing, in parallel, the B2B commerce, that coming online, that's happening across the region. So in Pakistan, we have 4 startups actually right now. So there's Bazaar, Retailo, Tajir, Dastagir, and all very good teams going after it. But the region, everywhere that's happening. And then eventually, and some of that has also started to happen, is that your healthcare, ed tech, that starts coming online. But I would classify all of that as either consumer or B2B. And then hopefully in like 3 or 4 years, I feel like we'll be seeing a second wave of startups. And that will be powered by people who have worked at this first wave of startups. You'll have a lot more founders. I think the problems would get, a little more nuanced. And I think you'll see even players doing enterprise software, in particular SaaS, that's targeting other markets. So you're building SaaS solutions for maybe a vertical serving Europe or US markets. I think you'll have those sort of startups coming up as well. And potentially, given Pakistani talent, I'd hope that in a third wave, you'll have some deep tech sort of startups coming up as well, where you're actually on the frontier of technology. Right now, that just doesn't happen that much, but I think there's an evolution of the ecosystem that will happen. And hopefully, like in 10 years, you'll have a very diverse startup ecosystem. But for now, I think consumers and, B2B focused on small businesses, that's our focus.
Yeah, I think that makes a lot of sense. And what's your opinion about it? I mean, one thing I do feel from the 3 waves spiel that Aatif just presented is one big thing I feel like missing is manufacturing hardware. And that's a backbone of any economy, and Pakistan is not an exception, and it should be. So what's your opinion about it, having looked at more developed markets? Would that happen at any point? Should people care about it? If they want to go into some ideas that they're really passionate about, they might not get any funding in some years to come.
Yeah, it's a good question, and we're struggling with it now here in the United States. So you could start to see this then playing out in markets like Pakistan. In the United States, for example, in the midst of the pandemic, I invested in a lot of hardware companies that had to shift their supply chain, either from primarily China and Shenzhen in particular, over to either Vietnam. I encountered one startup that was creatively using a family business in Pakistan that actually had a lot of heft in manufacturing, which I really loved. It was just a little bit too early stage for us to invest, and the technology and differentiation wasn't quite there. But had it not been for that, I think we would have taken a hard look at it. I think we're seeing a lot of talk about re-onshoring in the United States, and so at least the question, it's a fair one. Should we build up something like manufacturing, other B2B type services to better enable entrepreneurship in Pakistan? I think so, but I think we should look a little bit ahead to what is going to be the next leg of manufacturing. How do we get a decade-long head start on what's going to be manufactured? Is it going to be IoT devices? Look, I have smart plugs all around my home. It drives my wife crazy, but I have smart plugs and smart speakers all around my home. Those are relatively easy to make. The margin on it is relatively low, and the switchability costs aren't as high as they were, 10 years ago, 5 years ago. So for a Pakistani entrepreneur who might be thinking about, well, should I get into that game? It may or may not lead to the creation of 5 or 10 startups or manufacturing businesses. But what if you were to go into the next leg of manufacturing for bioengineering or 3D printing? I realized that the market then might not necessarily be directly serving Pakistani startups who could be consumers of that technology. I recognize that some of it may need to rely on supply chains that need to be built. But I think there should be some thought put to how do we take advantage of the B2B services that are going to be on the come. To serve up SaaS software, you could pretty much do that anywhere in the world. There have been some attempts of, for example, companies in India trying to serve the enterprise CRM market in the United States, in Israel trying to sell into that market. We see that in those markets, and what you usually find is you need to start a engineering and a sales team in the United States or in the UK, et cetera, to sell in those markets. And so what I would say is for Pakistan to think about a new B2B type sector or to invest more in there. I think there should be some thought put to what are the technology areas in which we could do that, as opposed to ones that are already 10 years behind.
Thanks, Dan. Just for the benefit of everyone, so Aatif had to step out for 5 minutes. He's kind enough to give us his time. It's actually his post-Walima function today, so he had to step up, and he'll be back in 5 minutes. So I had a couple more questions regarding the Pakistani ecosystem specifically. We'll wait for Aatif to come back and have a better discussion. But then I had one question for you, because you've looked at it from developed market, you look at it globally as well. Do you think, again, carrying on from the same manufacturing, high job impact, and so forth, with the consumer-driven venture capital funding, which is going to be ripe in Pakistan, especially for the next few years to come, and also the things that you're seeing in the US and other markets as well. Do you think a lot of this capital is actually driving the race to bottom? Because obviously you look at the top line growth, you look at a lot of things, and then the later stage guys come in, and then they would look at the profitability and all other metrics and so forth. And what happens with the bigger tech is just pushing down the costs and either driving out the competition in order to push down those. Where does it leave people who work? And is the entire population going to become hostage to these things, or where do you see that? It's a more philosophical question of whether it is an impactful investment or is it not?
No, absolutely. And just to clarify, just so I can better kind of address it, when you say race to the bottom, is it that you're saying are these investments basically saying who can make the cheapest technology and what's going to happen to the workforce in the wake of those types of changes?
Much more from a workforce perspective.
Yeah. No, it's a great question, because I think this is something that we think about a lot. By the way, I spend a lot of time, even though I primarily invest in US-based startups, a lot of my outside of work time has historically always been spent on how do I serve those without opportunities through the Aga Khan Development Network, which I know is very active in Pakistan, through organizations like the Muslim Urban Professionals Network, which has a global diaspora and includes many Pakistanis. And I also spent a lot of time with high school students and middle school students who are going to be the future entrepreneurs and have to be thinking about their skills. If what you're learning at grade 10 or level 10, is that going to be relevant when I'm 30 years old? And do I need to retrain, and if so, how? So let's talk about the quote unquote average worker, and no one likes to address themselves as the average worker, but let's say I'm someone who I've got hands-on talents. I'm a plumber, or I'm an electrician, or maybe I'm someone who owns a storefront, a restaurant, or a retail store. I need to be thinking about these changes. Absolutely. I need to start first with the low-hanging fruit. Are there things that I'm doing in my back office operations? Even just something as simple as handling customer accounts, being able to retarget to customers. I should be facile enough with those technologies. And so are there ways that I can retrain a little bit? And in some of these things, it's low-hanging fruit, using something like customer retargeting. There are easy tools out there that someone with WhatsApp can just start to use. And then from there, then I need to prepare for what's going to happen 5 to 10 years down the line. I think those changes are absolutely happening. Look at trucking. Trucking is one of the biggest industries in the developed markets. It is a big part of the supply chain, certainly in developing markets. Pakistan included. There are many involved in the shipping and logistics trade writ large. As automation comes to that, Uber just bought in 2016. They bought Auto, which is their self-driving truck division. I know there's been some changes there, but the trend continues. We had bought as Amazon Zoox. What happens to the driver there? They should think about what are the ways that that I can start to either advise startups that are in automotive. I should think about, are there ways I can start to advise auto companies? Or I should maybe even start to think about, how do I retrain my entire skill set altogether? Tools like AI are becoming more accessible. Even just like I said, using software, you can start to get onto customer retargeting, which is, I'm sure, something Aatif has a lot of depth in. But then can I craft myself over the course of 5 to 10 years into an expert in those fields? It's not the most immediate thing, but that will then help prevent that race to the bottom. It'll make sure that you stay top of mind in the next economy. And it's very true for the developing world.
Thanks. That's very comprehensive then. Aatif is back. Aatif, the question revolved around whether a lot of initial waves that you were talking about investing on consumer-driven sector, would that lead to race to the bottom, especially from a workforce perspective, that we see Uber drivers and the likes and so forth. So which can be a concern.
Yeah. So I think, like, even within that, so there is the gig economy where those concerns, I think, are highlighted. There's definitely some concentration of economics that's happening. But generally, like, where Pakistan is, actually the benefits far exceeds, those sorts of downsides. So we're talking about, making the logistics, the supply chain efficient. There's just so many inefficiencies. There's so many middlemen today, and you're removing that. You're replacing that with the technology layer that's much more efficient. So I think the net impact of that, I believe, is certainly positive, and it creates a lot of jobs, through that process as well. Now, there is a role for, when it comes to certain types of businesses where the workforce potentially can get squeezed out, like what happened with Uber. And I think Uber just was this strong force. It moved so fast that the governments actually did not know what to do with it early on. But now you're seeing some balance coming up in California. There's regulation that just got passed. So I feel there is a role for the government, the regulators, to make sure those sort of situations don't get created. And whenever, like, technology is a transformational force, like, it will happen, whether we like it or not. The best outcome for the society is where we recognize it as a strong force, and then the government is safeguarding the workforce and the population, and the technology companies are sort of, forced to operate within those guardrails that prevent some of the dystopian things to happen. But generally speaking, I mean, like, in Pakistani context, this discussion, actually, like, we're just so early. I feel like the benefits we'll see from this wave of technology startups focused on consumer, for the consumers, for the workforce at large, where the unemployment is large, but now all of a sudden you're creating all these opportunities for people, and from removing all those inefficiencies. I think it's just such a huge positive that we should all be embracing it. And there's a time to have this conversation, and I think we have to be careful that there is not a concentration of wealth that comes out of it. And one of the things that I like to think about is, like, you do a VC fund and you play a part and you create some companies. At the end of the day, you're gonna be 70 and you're gonna be retired, and you look back and you don't want to be part of, like, some of those really negative changes. And I think you've seen some of the early Facebook employees now rail against the company. You've seen that happen with Uber as well. So personally, when I think about that, is I do spend time with the founders and think about what their values are and how they think about it. And I feel, as we are having this sort of a change of guard, or new people coming and suddenly creating these large companies, if their moral compass or their values are in a good place, I think that tends to help. And that's all I can do at this stage, right? So that's how I think about it personally. And then on a global scale, I think like there definitely has to be a balance, and there has to be other forces that have to come into play at the right time to strike that balance.
Thanks. Yeah, I think these are important concepts. So part of your job, I think both of you, is trying to also identify who is and who isn't a Frankenstein. I think some practical questions are coming up, which I'll ask of you. So can you share your thoughts, both of you, on how seed round companies, especially when they don't have any business really, and they are only a few months old and still in the infancy stage, how are they valued in Pakistan as well as in the US?
I mean, I can't speak to valuation in particular, in part because it's going to differ between both countries, but also because it depends on the sector and the founder and what have you built. There's some companies that buy seed, you've built something that you've got, close to $1 million in revenue, and some that are not even on a PowerPoint. Maybe to take a step back, a broader question is, how can I think about seed financing for an early stage company? And maybe valuation plays into that. Certainly it's important. You're selling equity in your own company, but a broader question could be, how do I access capital? And I see that on some of the questions here. I would say this, it doesn't always have to be, and speaking on a panel with two venture capitalists as the panelists, and I'm saying it doesn't always have to be venture capital, because sometimes venture money does goal you toward sizable outcomes, and you might not be ready for that. So angel investors, friends and family can sometimes be a little bit more patient capital from that perspective. I would say, tap into grants, tap into customer-based funding to the extent that you can. And I always say this for companies here in California that often get a little bit of their head in the clouds about, well, I've got to raise $10 million of funding before I've even sold one customer. First of all, figure out, is there a market for what you're trying to sell? And so to the extent you can do this quintessential MVP and the technologies that are out there now being served by cloud providers, Amazon is one of those, but certainly there are many, many others. Take advantage of those where you can flexibly build something that's free. Test it out. Test it even with friends and family. Figure out, is there a there? And then think about the fundraising process from there. I realize I didn't answer the valuation distinction question, but let me kick it over to Aatif to provide more market context.
So I agree with Zan. Each deal is different, right? And sometimes people tend to compare, oh, the valuations in India are so high, and you're comparing it to Pakistan, or this startup, got $1 million and was valued at 5 million seeds, so I should expect the same. And that's not how this works. So I think a much more useful way, especially at seed, to think is, because you don't have really revenue. I mean, even if you've done a pilot and there's some early revenue, that's not truly indicator of what the revenue potential is, or there's not just enough history of it to apply multiples to it. And sometimes, PE people would try and tend to do that, and it's just not useful at seed. So what you're really looking at is, look, there is a big market opportunity. This team can go and get it. Useful way of thinking about it is, look, this is what we need to make it happen, or at least get to the next stage, right? Where we can show some traction, show some growth, and raise a larger amount of capital. And that's the figure that's much more important from the founder perspective, because you are closer to it. So you should be very clear about that. And then there is a certain percentage of dilution that you're comfortable with at that stage. And at seed, it's typically between 15 to 25%. I would not go north of 25%. That's too high. If you're really, like a good team, you can get away with 10, but usually it would be 15 or 20. So that automatically, like valuation backs out of those two numbers. So if you need $500,000, and let's say we agree that 20% dilution is reasonable one, that spits out a $2.5 million valuation. I do want to share from a fund perspective, what I like to tell people is, and this is a question you should ask each investor you're talking to is, are they more sensitive about, having a certain percentage of ownership in the company or the check size? And some people say, look, we're just going to do a $300K check. And some people would say, no, it's important for me to get 15% of the company, and I'm flexible on the check size. And I like to share that for our fund. And we tend to be ownership focused because we are a considered fund. We're going to do 10 to 12 investments for fund one. We want to own 16 to 20% of the company. So then I say, look, we're coming together. And if we end up being partners, it's a partnership at the end of the day, probably a 10-year partnership. That's my constraint. I want to get 15%, 16% of the company, right? And then tell me what you want in terms of money, like why do you need it? Where does that take you? And if we come together, great. We, like have a deal, we're a partnership. If not, that's fine too, right? But at least the very clear process, not super opaque, where you're trying to just use benchmarks and valuation multiples, and none of that really makes sense at seed. And one thing, just to add a note to that, is what does happen is the markets, ultimately prices come down to supply and demand. So when more capital comes to market, it's the same number of deals that are happening, prices get bid up, and, VCs tend to be willing to pay a premium for that. And if you have a market where capital is not coming, which was Pakistan between like 2011 and 2018, and that's why you were seeing like such depressed valuations. So that does tend to happen, but I think like we're past that stage, and for a while, I think it's going to be a fairer pricing, which ideally comes together from satisfying those constraints of the founders and the investors.
Thank you both. One thing which we see a trend about in public markets as well as in private markets probably is everything related to COVID. And COVID has done this, COVID has done that. Do you think the investment will completely shift in the next few years on COVID positive companies? Like, is there any sort of investment or ideas that, I mean, obviously you don't have to give details on, but on high level, that you're looking beyond COVID industries which are pretty depressed and you think will bounce back? Now, is somebody going to invest in airlines? Is somebody going to invest in hotels? What's happening in that space or any other space which is COVID negative, let's call it?
I mean, at the risk of taking a hot take, right off the cuff, I think a lot of the old school industries will continue. They're just going to operate in a much lower demand and maybe a different sort of operating procedure perspective. Airlines are starting to see a little bit of a creep back of demand. They're still way depressed. Hotels and hospitality absolutely will creep back. But over time, if you look at this, and if we're venture investors, so we like to think about things in 5 to 10 year increments as well. Things will start to come back. You just need to be prepared to be at the forefront of the best practice procedures. There are restaurants, there are hotels right now that are lagging behind because they haven't implemented the right COVID procedures. And it doesn't take that much capital to do that, or it doesn't take that much of a shift to do that. And so they're going out of business left and right? You don't want to be among those. And so as we think about large companies, there will be those that struggle to pivot. But I do think about these broader trends of like what's going to change from a venture perspective. People are spending time at home a lot. And so there's been a lot more emphasis on entertainment. I know TikTok is banned and unbanned in Pakistan right now, and same in the US. And but it's just amazing seeing what the uptick has been in the usage for something like that. And a lot of that has been driven by a COVID world that I think is likely to continue. People are going to start doing that. They're going to start to appreciate things like outdoor dining. And I know some of these are perhaps taking place a little bit more in warmer climates than others, and perhaps in some regards in the US versus in Pakistan. But I think those are things that will continue. So I just think you have to play it forward 5 to 10 years. That's my perspective. Aatif?
No, Zen, you covered it really well. And I'll just add one small bit about Pakistan. I think it's accelerated things. So people were forced to use technology more. And I think that's just like a good tailwind to have. But other than that, I think you covered it pretty well.
On the subject of staying home, do you think construction industry will get any VC funding in some sort of sense? Because we don't see of that in anywhere really, not that I know.
It's difficult. So the tricky thing is, I think most, like a lot of infrastructure projects, they tend to be very capital intensive, even in the early stages, right? So you have to actually line up the capital. So yes, we could imagine, there are software companies, tech companies that change the process or help that along, or bring, some innovation in mortgages, but that's a little bit separate and adjacent. I think the pure construction stuff, that's where you need more old money than venture capital money. And, venture money, especially the way the model is set up, is that you start with very small capital and you have to show some quick growth. Doesn't quite fit very well with the construction industry, as at least we know in Pakistan. Dan, what are your thoughts?
No, I tend to agree. We invested in, and I saw Mustafa on the chat had a question about prefab housing and construction approaches. So we actually have an investment in a company called Plant Prefab, which is a California-based prefab housing construction startup. They're focused on urban custom housing. Why it's a venture bet versus kind of a non-venture one, right? If you think about prefab construction, it's been around for decades. Why is this something a VC fund would invest in? We like their marketplace model. We like that they've got a lot of innovation on 3D modeling. We like that they're focused on this niche that's not overfunded, and that's custom urban residential housing. There are a lot of prefab players out there that are trying to blueprint basically big neighborhoods or multifamily apartments or office buildings. Big construction is really tough right now, pandemic. So totally agree. And the big construction tends to rely on the capital that Aatif was referring to, more traditional sources of capital. And so I fully agree with that. I would say there's some nuance on what within there can get funded and what's not. A good example would be, let's extract from prefab, but if it's construction focused on a burgeoning industry like bioengineering, maybe that is a potential for a venture bet, because you're taking this bet that over time is going to grow. You invest the first 2 rounds and then you draw in those traditional capital players. And by the way, when we go back to that question of how could Pakistan think about those enterprise sectors of the future, I think something like that would really position it well.
Yeah, I tend to agree. Thanks for mentioning that. I think that it's one of the biggest industries in Pakistan, and could do with some kind of innovation, either in the supply chain or something around that, which could be less capital intensive, like a B2B. Now, there's one question by Ilham here. So what do you look for in an elevator pitch? Of course, both of you talk to so many people, and Aatif also mentioned yours, spending only a few hours with a founder. So how can a founder leave a bigger impact on a VC like you? And from their perspective, what is it that they really need to hit home for your time?
I can start, and then feel free to add. So for me, I feel, like keeping it simple. So if you're just doing, let's say, a cold email, or we get to talk for 5 minutes, that's what I tend to think of as an elevator pitch. I think just being very clear about what you're building, why you're doing it, why you're uniquely positioned to be successful at it. That's the most important thing. So it's memorable. I can recognize it, and then I can decide, like if we should talk more or not. Right now in Pakistan, actually, talking to VCs is not that hard. So there are not that many startups. So there are a few hundred startups. I've talked to, 80 startups last time I did office hours out of the 220 or so that applied. And that was like 45-minute conversation. So from that perspective, actually, at least as far as Pakistani startup ecosystem goes, I don't think that opportunity is that skewed. It's much harder in Silicon Valley, I think, because a lot of problems have been solved, and, you really have to be doing something different. I think where people trip up is they try to complicate that initial message so much where, it just doesn't stand out, and I can't even make sense of what is unique about that they're doing. And that's the stuff that tends to, gets filtered out.
Yeah, I think that's a good generalizable tip to, I think, Pakistani entrepreneurs all over. Keep it simple, keep it memorable, and keep it concise. So there's a good example I like to walk through when giving a pitch. So here's a really bad example. We provide data and analytics in a comprehensive project management suite, enabling audio content creators to glean insights that inform decisions throughout the production cycle. Aatif and I are probably rolling our eyes, how do I remember that? How do I even know what you're doing, right? And Hammad, you could probably imagine if a public company said that, they would get no investors, right? And how do you simplify that? You could just say something as simple as, we do analytics for podcasters. Boom, easy enough. And at the end of, Aatif said 80 companies with whom he met for office hours. How are you memorable at the end of that 80-hour or 80 company day, right? Or 80 company week? That's really important. That's how you get to the next 20 seconds. And then in the next 20 seconds, start to say what's compelling or unique about my startup and my team. And then from there, I think you can have a broader conversation.
Thank you. One question around the workforce is here. I think that's probably one of my favorite topics. That we see in the Valley that tend to typically like sizable employee option pool. However, that's not the case in Pakistan. Is that something that is being pushed by the VCs like you, Aatif? Do you think it is going to happen, or is it happening?
Yeah, absolutely. Absolutely. So I talked about the values, founder values earlier. So one of the things I do ask them, actually, before I push them, I ask them, like, how do you think about employee options? And if it's the case where there is, 3 co-founders and one founder says, look, I've got 80%, the other guys have, like 10% each, and we're not giving anything to employees, like, that's a big red flag for me. And when it is, like, oh, actually the founder is splitting the equity equally, and then we're thinking about employee options pool, we're very flexible on that. And we need some guidance about the best practices. That's what I tend to like, and generally we'd push for saying, look, you should plan on having 10 to 15% employee option pool, not all at once. So some of it will happen after the subsequent round, but a good start is like start with 10%. Especially early on, you need to attract really good talent, and I feel in Pakistan that's actually super important. So in Valley it's table stakes, but even in Pakistan it's very important because no founders can build that, a compelling startup by themselves. And your company's culture is going to be the culture of like what those first 10 or 20 hires are going to be. So attracting really, really awesome people is important. There are 2 things you can do to attract them. One is your mission that Zan talked about earlier. And then 2 is actually the financial incentive. And that's not salary. That is employee options and upside in the company. So I think it's very strategic. It aligns the incentive. Strongly recommended. It's definitely worth thinking about it and setting it up correctly from the get-go.
Thank you, Aatif. Zen, you touched upon this particular area about a SaaS company coming out of Pakistan. There's a question around it as well. That how do you see a software economy coming up in Pakistan, especially IT outsource? I wouldn't really narrow it down to the outsourcing, but also SaaS. And you mentioned the need for engineering and sales companies, sales employees in the US and elsewhere. How do you see that happening?
Yeah, it's I don't really have a great sense of what's the killer way that that Pakistan can start to attract or build more SaaS companies over time and become kind of one of the cornerstones of SaaS, other than to say we need to have the right functional expertise, right? As you see where SaaS companies are concentrated today, one of the reasons Silicon Valley thrives is they have really strong experts like Aatif who have functional expertise in an area like growth marketing and have become the guru when it comes to that. And there might be, for fear of saying this, it might be 2 or 3 or 4 Aatifs around the Silicon Valley area that you can then try to attract into your company. And then same for engineering talent and leadership. If we can get to the point where we can start to aggregate that within Pakistan, or alternatively, if we can aggregate the Pakistani diaspora that can have an affinity around, I'm going to work for a Pakistani founded startup based in Pakistan and offer this particular expertise and spend a lot of time with the team building up that expertise level, then you can get to the point where there's a strong native homegrown SaaS industry that is themselves spinning off other teams and then other SaaS companies and so forth. Because for the next 2, 3 startups, they'll look to that original startup that had already built up that expertise. I would say this, when I think about areas of innovation, I look beyond just traditional software. And I would say there are ones that may be uniquely Pakistani driven. For me, food science and food sustainability is actually a strong area. Why is the revolution in new meat types, right? Why is that happening in the United States versus in areas where our Pakistani markets uniquely have food supply issues? We uniquely have many pockets of Pakistan that are agrarian or suffer from themselves a mix of climates. You've got the mountainous regions of northern Pakistan. You have plains elsewhere. And how do you uniquely tailor your agricultural technology to that? So I think those are some of the industries in which I would foresee investment, as opposed to traditional just SaaS companies. But I'll borrow back, right? The same functional expertise still needs to be built for a hard technology company like food science, or for water management, or for bioengineering, as it does for a SaaS company.
I think that's a great idea. I think that's where I believe also a lot of innovation can happen and should happen. I think one question that came up, and I can't find it again, but I remember, is could you share anything that you felt was a terrible investment and why in an early stage company?
Well, so I'll spare Aatif. Oh, go ahead, Aatif.
Thanks, Ann. No, go ahead.
Poor guy is spending some time at his walima. Yeah, he's spending time there. So I don't want to. I'll give him. This is my my virtual walima gift to spare you from that. But I would say we've had so many. There was one hardware company in which we invested, and it shut down. It's called Adero. And I liked the team a lot. They used to be called Tracker, but what they did was they created item tracking devices. So it's small hardware you could attach to your wallet, you could attach it to your key ring, and the idea was that you could build a network of these devices over time, and everyone's got one, and there's this mesh Bluetooth network that allows for you to, if you lost your wallet, it pings you because, you know, it's at the coffee shop or the restaurant down the block. Well, the reason why this was really a tough space in which to invest, one, we had first-time entrepreneurs, and they were rather young. I wouldn't say that necessarily meant we will never invest in young entrepreneurs, but they didn't necessarily have the best plan in place to spend that money over time. And part of that might have been the guidance, but part of that might have been, you know, how bullish they are on this space that hasn't yet played out. Second thing was it made a huge bet on consumers are going to go and buy this, and they're going to buy this in the millions and tens of millions of devices, which is what you needed in order to have this network be built out. I contrast that to what I said earlier about seed rounds and seed financings. Hadn't proven the concept. You're talking about a company that's raised in closing in on the $100 million figure, before really it had proven out that density of network that it had built over time. And maybe, you know, a third or fourth reason is that how many of these companies can there be, right? What's your competitive advantage? And what they had built had been replicated elsewhere. So there wasn't something that 4 or 5 years down the line was going to say, this is going to be the billion-dollar company that's going to get built in this space. So as expected, it sort of sputtered, and the company had to shut down. And other companies in this space have suffered because of sales, but because there's been a winnowing of companies here, there fortunately are some independent companies trying to solve this problem. Not necessarily the worst, but one of the poorer performing ones.
Thanks, Dan. Thanks for the sharing. Aatif, you want to add anything to it, or we can spare you the?
Yeah, so I'll quickly add. I don't think from the fund, you know, I think all the investors are super happy about it. It's just a few. But during my angel investing, you know, the type of mistakes, the one, you know, invested in a hardware startup and just didn't think enough about how large the market was. And that lesson was that, you know, if it's too small of a market, it just doesn't matter. And then the other one is FOMO. So, you know, early on, you tend to invest because, oh, there's some hot VCs that are investing in this deal. And that sort of like you suspend your own thinking. from first principles, and I learned that lesson the hard way. And now I don't care who else is investing, right? And you have to basically form your own opinion on that. And then there's another type of FOMO, which I think is relevant in Pakistan right now, which was almost a near mistake here for us, where because the markets are clear, that some market is going to be big, and then you're striking this balance between, look, I don't necessarily need the best team, in this market. I need a team that will crack this market fastest. So you're sort of like, you have a little bit of FOMO of like, oh, this market, will this go away? And sometimes I think it's tempting to compromise on the quality, lower the quality bar for the founding team to just get that speed advantage. So I almost did that in one case, but then thankfully it didn't go through. And then later we ended up finding a much better team and invested in them. We're super happy with that.
Thank you. We are at the hour, but we do have some time unless you gentlemen have some commitments. So I'll just take 10 extra minutes and so forth to do a couple more questions. By the way, in audience, is there any other question that you guys feel is unanswered? Just paste it again, and I will try to ask that. So Aatif, two specifically for you here is tech entrepreneurship in Pakistan concentrated in one or two locations, just like maybe in a couple of cities in the east?
Yeah, Lahore and Karachi. So they're both fairly close. Karachi is a much larger market than Lahore, so I think naturally, like doing consumer or B2B.
I think we've lost Aatif's voice here. Zain, are you able to hear him, or is it just me?
Yeah, no, it looks frozen.
Okay, that's fine. I think we'll maybe pass on to the next question, and maybe he comes back. There was one thing. There's one more question. Is what is the future of AI-based startups in Pakistan, especially? I think in the Pakistani context, and where you then look at AI, especially in a more context, is it sizable enough market for a global investor like you?
Yeah. Oh, it looks like Aatif's back. I can think on that if you want to kick it back to Aatif for the last.
Sure. Can you hear me now? I could hear you fine earlier.
Yeah, we lost you when you were mentioning consumer in Lahore.
Okay, yeah, so it's Karachi and Lahore, both big markets. Pakistan is one of the few countries with two mega cities, 10 million plus, and that's one of the reasons Pakistan is so exciting. Both have really good tech talent. I think Lahore edges ahead on talent. Karachi is the bigger market. It balances out. Islamabad, Rawalpindi is sort of a distant third. I think there are more tech companies there that are services companies serving the US market. But for most startups to be successful in Pakistan, I think they have to win both Karachi and Lahore. So another signal for us is how quickly a startup that starts in Lahore expands to Karachi and vice versa. And that's a very good signal that they can grow to other cities.
Thanks, Aatif. Then back to you on the AI.
Yeah. I think about two types of AI companies. One is core AI science. Are you doing something unique that's expanding what's possible with AI generally? In other words, are you a tool for AI developers to help further deepen what AI is? And then there's applied AI. So it's taking the AI technologies that might already be off the shelf, stuff you can get on like, a Google Cloud or an Amazon Web Services or OpenAI, and are you applying it to a particular industry? So the question of what's the future of AI, or can AI be big enough in Pakistan? It all depends on what's the industry that you're applying it to. If we're talking about applied AI. So take something like computer vision. A problem that's uniquely Pakistani is disaster management. By the way, it's something that's global, but uniquely Pakistani insofar as you look at a lot of the northern Pakistani areas, they've suffered from the effects of climate change. They've suffered from disaster management. Is there some unique AI that can be applied to geointelligence data and perhaps even computer vision that can then extract what are the insights that I need to serve up either to government payers and this is where the business model needs to be figured out. Could it be NGOs? Could it be government payers? Could it be construction companies that are thinking about ways that they can pitch sustainability projects? So that's a uniquely Pakistani AI problem. It's an AI company that would get built around it. The question is, how big is the category? If you took a look at the healthcare context, it might be even bigger, right? Take a look at just the number, sheer population size. Pakistan is one of the largest 10 to 15 countries in the world. I probably am underestimating there. And so if you look at the potential patient population, there's a lot of insights that can be gleaned there, and potential buyers of that data, both with patients within Pakistan, but also pharmaceutical companies, biotech companies that are looking to buy generic type insight data. So all of those can be solved with AI. I absolutely believe it can be big enough. And then the other thing is, you get it right in Pakistan, you can then use that same technology and apply it to other economies. So just go one hop nearby and go into Afghanistan. Let's go one hop nearby and go into Bangladesh. Let's go into Tajikistan, and so on. I think then let's go from there into the Middle East. I think those hops can be made.
Thanks. I think these are some great insights and very useful. There are quite a few questions here. Maybe we just do some short answers, and then I'll ask one last at the end, which is, Aatif, specifically, any recommendations on social media followers and subscriber growth as growing techniques?
No short answer to that. So I think I have some talks online if you want to Google, but what I'd say is, just understanding what you're driving growth for. So like just driving followers doesn't really help. It should, then should be actually some sort of product engagement, and then baking the growth levers into your product itself is pretty effective, rather than just tacking on marketing on top of it. I'll keep it short.
Thanks, Aatif. Again, very short. Zen, for you specifically, again, do you see European and US institutional investors taking a shot in Pakistani startups directly? It's already happening. So.
Yeah. I think it needs to be aided by, at this point in time, strong institutional investors like Indus Valley leading it and pulling in US and European institutional investors, where we're not leading rounds there, but we're participating alongside, or by government or NGO development finance institutions. Like in the US, there's the OPIC, Overseas Private Investment Corporation. If that plus an institutional investor like Indus Valley were to lead around, for example, Alexa could take a look, and that could be a route in.
And just to add to that, Ahmad, this is happening. Actually, there are more US investors who have invested in Pakistan than in Egypt, or maybe even Dubai. I can't look at the data, but definitely more than Egypt. And then first round capital, which is the tier one VC, early investors in Uber and Square and Looker, they had not invested in Asia for over a decade. They ended up leading a Series A, a $12 million Series A in a Pakistani startup, Airlift. So I feel actually Pakistan is more well positioned because there's so many Pakistani diaspora there. And some of them are coming back and doing the startups. Others have networks into Pakistan. There's some really strong VCs. We talked about Alexa Fund. You look at Kleiner, Mamoon is there. Bilal is at Lux. So, there's very strong networks. So I feel it's going to be somewhat easier actually. And it's happening. You've had Pioneer, Quiet Capital, YC, Village Global, a bunch of others from US, and then Europe as well. Vostok is invested. And they're frankly, we're in such infancy that, it's actually a very pleasant surprise that we already have so many US VCs investing in, but play it out 3 years forward. And I think we will see a lot more.
Great. That's a great story. I think we'll end at one thing because we're almost over time. We see, at least from where I see, a lot of the startup funding and a lot of startups, especially in the seed round, they tend to go to very experienced people who also have some, I would say, pocket change at the back, where they can fall down and take that risk. Is that right from a VC's perspective, that you also look at founders who A, are financially stable, for the lack of a better term, and B, are well experienced, which means that leaves a lot of the school dropouts, university startup graduates out of the picture?
Yeah, I mean, I would say on our side, it's it's unfortunate, and that's why we're trying to change that. But it's unfortunate that a lot of the entrepreneurs that historically the venture capital industry writ large has invested in or has tended to float toward has followed a quote unquote template. And I don't think that's the right approach. And I don't think that's the right approach in the long run. And so that means maybe having a more expansive lens when it comes to education, but also gender. We're hosting, by the way, a women founders pitch competition that's global in a month. And I think that will play, and by the way, a few Pakistani entrepreneurs who had pitched that and have participated in the process. I think those types of things will go a long way toward moving away from that typical founder stereotype. I think more work needs to be done on education and career experience within that typical entrepreneur stereotype. But suffice it to say, you do need to have a certain set of skills in place. So can you get that through other experiences? And in racial, I think as well, and I think that's as true in a market like Pakistan as it is in the United States or other parts of the Western economy. So yeah, I think we should move away from that stereotype. It is unfortunately some of these investments do seek out to say who looks like a successful entrepreneur, and then that forces us down the road of what's the template.
Aatif, any more color?
Yeah, so Zan put it really well. I think there is the playing field is definitely not level, and there is bias, conscious and unconscious. One of the things that we try to do is we'll talk to anyone, right? So let's not have a filter before the conversation that requires experience or education or even speaking English for that matter, right? And then you have the conversation. Or the fact of the matter is that if you look at the US, I think they did some research on successful entrepreneurs that had exits, and the average age tended to be 43 years. So I think experience does help, and it comes from actually having seen or worked at other startups and knowing how to avoid some of the pitfalls. So that's helpful, and I think that will continue to show in the statistics. But there are a lot of other variables that are actually not at all relevant, and I think it's just a matter of access to opportunity, like Zan put. And that's where we all need to make that conscious effort to do that. And I think one phenomenal success story to come out of Pakistan on that front is the Atoms founders, Waqas and Sidra, who went to government schools in Pakistan. When they started, they didn't actually speak English very well. They learned everything, including how to market, how to make their first website. Did a very successful Kickstarter while sitting in Pakistan, one of the most funded ones, then got into Y Combinator from Pakistan. So that's, there are many more stories like that. And I think we just need to do all we can to provide that first check and first words of support and first intro to see more of those successful outcomes. And the more there are, I think it will inspire more people to come in and grow. Tilt the playing field a little bit so that it's leveler.
That's a great story. Thanks for sharing, Aatif. It dispels some of the myths, but I think a lot more, as both of you gentlemen say, need to be done. And thanks for doing your part. We have to draw a line here, so apologies to the audience whose questions couldn't be asked, but I tried my best to wrap them all together in some sense. And thank you very much, Aatif, and thanks a lot, Zan, for your time on a Sunday. And wish you both best of luck with investments. And hopefully some people here might end up being the beneficiaries of it. If anyone has any questions, any follow-ups, please do write to Park Launch on the WhatsApp or on the website, and hope to see you again soon. Take care. Bye.
Thanks, Ahmad.
Thanks, Ahmad. Thank you all for tuning in.